Hello, welcome back to Commerce Easy Notes. Today we are going to discuss on Budgetary Control 6th part, Operating Budget. Operating budget portrays a company's expenses, expected cost and estimated income, considering the quarterly or annual performance. Here the accountant completes the operating budget before the accounting period starts in order to include income and cost projects. We know all the budgets are prepared that is to know beforehand what is the income and expenditure related to the matter. Operating budgets are classified according to its functions as sales budget, selling and distribution budget, production cost budget, materials budget, and purchase budget, and much more. Important budgets are discussed here. Sales budget. Sales budget is a financial plan which shows how the resources should be allocated to achieve forecasted sales. We are estimating the sales of the firm. Here the main purpose of sales budget is to plan for maximum utilization of resources and forecast sales. Now, selling and distribution budget. Selling and administration expenses of the budget comprises of budgets of all non-manufacturing departments such as sales, marketing, accounting, engineering, and facilities department. Here, the aggregate of this budget can revert the size of the production budget, and so it is worth of considerable attention. So, ample attention should be given to these kind of budget. Production budget. Production budget is a schedule showing planned production in units which must be made by a manufacturer during a specific period to meet the expected demand for sales and the planned finished goods inventory. Your production budget prepare a schedule for planning for production, how much to be produced. That is what production budget plans for. Your production is typically on monthly or quarterly format. The basic calculation in production budget is estimated unit sales and stock to be maintained at end. Now then gives you total production required, and then minusing the opening stock gives you the product to be manufactured. That is, the product to be manufactured monthly or quarterly or annually is forecasted in production budget. We learned this production budget through an example. Example 1. Prepare a production budget of Lucknow Limited for 2019-2020 from the following information. Here the items are given, the stocks, sales, budgets items are given in units, not in rupees, in units. Quantity is assessed here, and that is why production budget is assessed in quantity basis. We have 4 types of product A, B, C and D. Budget is given 2 lakh units, 1,80,000. C product is 2,50,000 units and D product 2,05,000 units. And here the estimated stock is given 2 types, that is in 1/4/2019 this is opening stock, this is opening, and this is the closing stock. Okay, here product A, opening stock given 20,000, closing stock is 15,000. So using the before said formula, we are asked to find out the production budget. The beforehand formula is, see, estimated units, sales, stock to be maintained at the end gives you total production required, and then you're minusing opening stock, it gives you product to be manufactured. So this is the question part. The answer looks Lucknow Limited production budget 2019-2020. It is all in units. 5 columns are given for estimated sales are given. See, 2 lakh. B 1,80,000, and for C 2,50,000, and D 2,05,000. The sales budget is given as here as estimated sales. Now we are adding stock to be maintained in 31/3/2020, that is the closing stock. This closing stock is for A 15,000, B 30,000, C 8,000, and D 20,000. That sales add stock to be maintained. The closing stock is added, and then you get total product to be produced. 2 lakh plus 15,000, 2 lakh 15, 1,80,000 plus 30,000, 2,10,000, 2,50,000 plus 28, 2,78,000, 2,05,000 plus 20,000, 2,25,000. And then your formula says less estimated quantity of opening stock. Opening stock for the 2,000 product A, B 20,000, C 30,000, and D 10,000. It comes to the opening stock. It gives number of units produced 1,95,000. For product B 1,90,000, and product C 2,48,000, and product D 2,15,000. So that is what a production budget look like. Production cost budget. Production cost refers to the cost incurred business from manufacturing a product or providing a services. Production costs can include a variety of expenses such as labor, raw materials, consumable manufacturing, supplies, and general overhead. So here we calculate the production overall cost of a firm. Materials budget. Direct material budget or material budgeting details the raw material that must be purchased to fulfill the production requirement and to provide adequate inventories, not more or less but adequate apt material as inventories for the production process. That is done with the preparation of material budget. We'll see an example related to material budget. Prepare a material budget for Lucknow Limited, taking information from example 1, the previous example, and here material specifications for 10,000 units of each product are given below. It is given in units are given below. That is likewise we set for production budget. Here production is same question. Here we have given the sales budget and estimation, and we found out through production budget the number of units to be produced. Here in material budget we'll see that specification for 10,000 units of product A we use material X 5,000. Likewise for producing 10,000 of product B, material X uses 7,000. Okay, so this is how the question is. Now, the question says we are asked to find out the material specification for the product produced. So this is how the material budget looks. So from previously prepared production budget, we get product to be produced A 1,95,000, B 1,90,000, product C 2,48,000, and product D 2,15,000. From this detail, we'll have to prepare product to be produced. Product A, C 1,95,000, B 1,90,000, C 2,48,000, D 2,15,000. For producing product A 10,000 units, material X used is 5,000. Likewise, producing 10,000 units of A, Y 8,000 and Z 10,000 are used. So we need to find out, according to this number of units produced, how much material X will be needed to produce product A. For that, we need to go for a working note where 10,000 units of product A can be produced with 5,000 kgs of material X. Hence, for producing 1,95,000, according to the production department, how much material X are needed? That is 5,000 divided by 10,000 into the number of to be produced. That gives you 97,500. Likewise, for material Y, how much for producing 10,000 units of product A should be found out by saying similarly. Here we see 8,000 units of material Y are needed for producing 10,000 units of A. It becomes 8,000 divided by 10,000 into 1,95,000. 1,56,000. Similarly, here we have Z material 10,000. Therefore, 10,000 divided by 10,000 into 1,95,000, 1,95,000. Similarly with B, C and D products. And totaling all this, it gives out total required quantity of product A, B, C and D. The total required quantity of material X, Y and Z. Now, the price per kg is given. X material cost ₹3. So, the total material cost amounts to 8,17,500 into 3, 24,52,500. Similarly, for material Y and material Z. This is how a material budget looks like. Now, production cost budget. Production budget is a component of operating budget that determines the number of units to be produced to meet sales. Number of units to be produced to meet sales and ending inventory needs. The production budget is expressed in terms of physical unit. That is not in cost but physical unit. It is expressed in physical unit, how much stock should be needed. The production budget's period often depends upon the product cycle as well as the operating environment of an organization. Therefore, it may vary from month, quarter to annually according to the situation or nature of the business need. Purchase budget. Purchase budget determines the number of units or product you will need to purchase each month. How much these purchases will cost you each month, when these purchases will be paid, how much will you owe to the supplier to the end of the forecasting business year. All this have been find out in purchase budget. So this is why we prepare a purchase. To know all this, creditor, debtors, how much amount, all this we prepare purchase budget. Now we'll see an example of purchase budget. Continuing the same example 1. We are asked to prepare a purchase budget. Here the material X, Y, Z, that is the ingredients for producing the product A, B and C in the last questions. The materials, ingredients, opening and ending stocks are given. Estimated stocks are given for X, Y and Z. We are asked to prepare the purchase budget. That is how much in a year or the month of the budget prepared, how much should we purchase. That is what we find out in purchase budget. Purchase budget where estimated consumption. In the previous budget, that is material budget, we have identified how much should be the total quantity required. That is 8,17,500 for X, 5,58,500 and 3,50,400 for material Z. Therefore, that is carried down here. Estimated consumption for material X, Y and Z. And the stock required on 30/3/2020, that is the closing stock. The closing stock is given in the question for material X 10,000, Y 4,000 and Z 11,000. This is added back 10, 4 and 11,000. Now total requirement becomes 8,27,500, 5,62,500 and 3,61,400. And then here we less stock on 1/4/2019, that is the opening stock is subtracted, the quantity to be purchased are given. It amounts to 8,17,500, 5,57,500, 3,48,500. So this is the quantity to be purchased. So this is what we find out in purchase budget, and we multiply it with the estimated price of the materials. 8,17,500 into 3, 5,57,500 into 4 and 3,48,400 into 5. It amounts to estimated cost of the materials 24,52,500, 22,30,000 and 17,42,000. So this is how a purchase budget look like. Thank you for watching.